Hi, welcome to this video today, which is our weekly Forex forecast. It's the 13th of July. Just going to give our view of what we consider to be the best risk to reward trade setups to focus on in the week ahead. And we see plenty. We'll just be taking a look at the charts in a moment. Now, from our perspective, we see plenty of trend reversals, which we think offer really great risk to reward. And also, in terms of trend continuation, as well. We see plenty of big trends that are going to continue after a period of consolidation or pullback. So from our perspective, could be a very interesting week ahead. Now we're going to go and take a look at the charts, but please do keep in mind, is my view as of this moment in time. It can change in line with the market conditions. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, you can click on the link beneath this video, get live access to our member centre. Now, I've been updating the charts in our member centre, doing my weekly analysis, so we're going to use the charts from there. So let's go and take a look at just them. In our member centre, and just very briefly for new viewers, I'm just going to explain how we do our analysis. If you're already familiar with how we do our analysis, you can just skip forward to the next 3 minutes or so. Now, in terms of our analysis, we're only going to work off daily charts, okay? We're not going to drop down to lower time frames. We just consider that trading noise. So it's daily time frames that we're going to use. We're not going to do any market orders or sit around watching price action. We will do all our levels in advance and let the market do its work or not in terms of getting us into trades. And you're only going to look at price action twice a day, once when London opens and then once when New York closes. See if we need to make any updates. So set and forget trading. And in terms of our trading, we are going to keep our charts very minimalistic. We're hardly going to use any trend lines at all. We do not want them. We only want levels that we consider are important to key players in the market. So there's going to be big order flow around the levels. Now, to find those levels, we will use the weekly charts, see if they back up the daily charts. If they do, then that basically will make the levels more valid for us. And we'll also do sentiment analysis to get directional bias for our technicals. And in terms of sentiment analysis, we will do our own. However, our favorite tool to use, which is totally free, is the CFTC Net Traders positions. So if you're unfamiliar with this tool, just look up our video CFT Net Traders indicator on our channel and it will explain more about them. Just briefly though, the way we use the tool is it gives you actual positions of speculators and commercials. Commercials are smart money, okay? When their positions diverge significantly away from speculators, we'll want to go with the commercials. And I'll basically go through some setups, obviously, in relation to the COT as we go through the video. It is a fantastic tool because it can alert you to trend changes in advance, which you can't see purely from technicals. And we're normally after a minimum of 200 pips per trade. We really want 300, 500 or more. We'll very often get those sorts of moves, and they will normally be with the help of the COT. Technically, you just cannot tell how far a trend is going to run. And a lot of traders said to me, you don't trade purely technically. You're always looking at the sentiment behind the charts. I did a video on this earlier. You've got to. I hear a lot about price action traders making money from the markets, but I never see their trades. We've got to give our trades in real time, entry, stop and target. If we're doing it purely technically, we wouldn't make much money at all, if any. You need to know the sentiment behind the charts, where the big money is sitting, give you that directional bias. And just keep your technical analysis just so simple, which you'll see when you see our charts. Now, in terms of the charts, we are going to go and look at them now. And generally what I'm looking for this week is regular viewers know this, I'm very bullish of the British pound for a trend change. I'm very bullish that the yen is going to basically continue its long-term uptrend. I'm looking for a turn in the USD as well. So let's go and look at some trade setups. So what we're going to do, first of all, is start with the major currencies. All right, just on the first trade we're going to look at, which is Euro USD. And I've done plenty of videos on this pair. And in terms of this pair, I believe limited upside and a lot of downside. I've been pointing out in previous videos that we don't really have much volatility. It's near historical lows and quite choppy price action, but all the risks are to the downside in our view. Now, in terms of the current position, it's 113.65. Came off the 114 level. It has fallen quite nicely now, a bit of a rally, but we've only got just under 100 pips profit, which is neither here nor there. However, what I would stress about this pair is it's got very attractive interest rate earnings on short trades. So while the volatility isn't high and we're waiting for the big breakdown, you pick up that attractive interest rate carry, and it really does mount up when you've got leverage on your side. Okay, now in terms of the euro, yeah, it did break down quite nicely. Now it's had a rally back. I think that rally will fade. I've drawn in this level here because it lines up almost with the 20-day moving average, which we think will now hold rallies. And you've got the 113 RAM number behind, which is really strong resistance in our view. Now, in terms of the euro, why do we think it's got limited upside? Well, the economy is in mild recession already. It's slowing up pretty quickly. The ECB are getting ready to do stimulus and print more money. Got a banking crisis. The economic situation is going to get worse. So, longer term, the euro going down. We also think the trigger to really increase volatility in this pair could be Donald Trump aiming tariffs at Eurozone autos, which he's threatened to do, and I think he's going to do it. On the other side, US dollar, the market is expecting too much in terms of interest rate cuts. Expecting 50 basis points this month, 3 more cuts after that through to mid-2020. The Fed have not indicated doing any. Okay, so market ahead of themselves in terms of expecting too many cuts from the Fed. They're not going to be coming, in our view. If they do, they're discounted anyway. Just really, this one's going to be a patience game, I think. We need to break this level here below 110.80. I think once we break that level, I think we could really see big downside. I put 108, then 104.50, then maybe even 100. While we're waiting, though, we've got a little bit in terms of profit, but we're picking up that really nice carry interest, and it's the best carry interest in a major pair. Okay, so it's a patience game with this one. I know the volatility is low. It's been choppy price action, but all the risks are to the downside for us. Now, when we move on to the next pair, which is going to be GBP USD, this is, in my view, going to be a really big move to the upside. We're confirming a trend reversal. I did a video on it on Thursday where I'm saying basically that I feel that all the bearish fundamentals are now in for the pound. Okay, they're all discounted. You can find out what they all are if you want to look at the video I did on Thursday. But very often when the market just sees no end in sight to a fall or a rise, then you just do get one, because you've got, in this instance, a bearish extreme, too many speculators short, and now we're starting to see price action come up. And we made the double bottom here. Now we've worked our way above the 125 level, well clear of it. We take out this 20-day moving average, 126 level, we should see a big move to the upside. So at the minute, 125.30 in, just at 125.72, so neither here nor there. But if we can get to these targets, this is a really good risk to reward trade. Now at the moment, my stop is at 123.60, so well back. For the Monday open, we don't have a collapse in the British pound, which I don't think we will. I'll bring it up behind the second level resistance. Now, in terms of when I did the video on Thursday, I hadn't seen what the smart money was doing this week. I only had last week's data, but I felt that this week, data's just come out on Friday, that the smart money would have added to their long positions, or the speculators will have added
to their shorts. And we just look at it here and we can see commercials in red, large speculators in green. There is the commercial big ad in on long positions, specs added to shorts. Now, in terms of the commercials buying heavily, specs going against them, the commercials were defending this level 125 and basically trying to push it off the level, just like they did over here with a slightly smaller divergence. You've got to move up there to 132. I'm looking for a similar move up, 131.80, so roughly the same. So the way the two groups have really gone against each other gives us some confidence that the pound should continue to the upside. And you've got smart money buying in the British pound now across the board against other currencies. So I just really, I know I bore people with the British pound a bit with my bullish stance, but I just love the risk to reward on pound longs. And there's some other great risk to reward pound longs as well. Moving to the next chart, which is the AUD. This one really low volatility, okay? And not really doing too much. 0.6980 in. We're just above the 70 level, so a few pips underwater. But it's going to be very hard for the Aussie dollar to break higher, in my view. Just feel that, in terms of the Australian dollar, they're cutting interest rates. The economy's not in good shape. Global growth is slowing. That will impact on the Aussie. And I just feel this rally here obviously failed. Now we're going to try again. Just don't see us going higher. Dollar's oversold. I think come back through here, going down to new daily chart lows, then 70, then 60. But fairly low volatility. Perhaps not the most interesting pair of all, but one to watch out for in my view. Right, moving to one pair where we think there's going to be continuation of a bullish trend. It's the yen. Yen going up across the board in our view. Okay, we did have a very nice short trade on the way down here. Okay, and the rally's come, or the rally came. We've sold the rally, so you can see the trade. The previous one 111.40 out at 108.80, so decent profit, and then we've just sold at 108.50, and just come off this 109 level. It's a really firm level. It's a round number. Now we're coming through the 20-day moving average. I think we should go down to new daily chart lows, and you can see what we're looking for in terms of targets: 104.50, then 100. A long way to go on the downside. Now the yen, longer term, we view as the strongest major. We think it'll be the strongest major this year when we look back in December. And it's shown good strength. And for us, nice move down, inevitable retracement, gonna have them, then resell. Trend's got a long way to go on the downside. The yen, is the most oversold major. We are expecting risk off as well, which would be bullish for the yen, but it's doing well in risk on as well. Just so oversold. Far higher prices in the yen on numerous other currencies. So I really like the look of this one. Moving to the next one. I got this one wrong actually last week. I was taken out on stop. I tried to buy after the Bank of Canada on strength. I then got stopped out basically. So 130.20. However, what I want to do is re-enter along at 130.45. Now, in terms of I've done that stop wrong there. Sorry, it should be 129.20. That one shouldn't be there. Sorry, didn't notice that earlier on. It did fall just as we take our stop, then kind of rebounded. Just sat around there all day. Okay, into Friday's close. So just a little bit of strength. I just think perhaps I put my stop a little bit too close. Then I'm looking for a big move to the upside. And the smart money now has gone short the Canadian dollar, okay? Long the USD. I'll just show it to you here. And it's interesting. Obviously, this chart is the wrong way round in terms of its Canadian dollar v US dollar. All pairs are like that on the COT. You get the foreign currency first, but you can see the commercials very long of the Canadian dollar. They push it up, okay, and push the US dollar down. And now look at what they've done. They've crossed the speculators. Speculators have gone long the CAD, short the USD, and the commercials have gone against them. That is the first crossover since March 2018. And when you get a cross like this on the COT net traders positions, very often will go in favor of the commercials. So they crossed over basically here into the 131 level. You do get a bit of selling, obviously. Now I just think we're going to get a big rebound. And yeah, CAD, most overbought major currency in our view, going to go down on numerous other currencies longer term. Did get this one wrong last week and a bit annoyed to be taken out by just a few pips on stop. But if that happens very often, it doesn't happen to us that often actually, but if we get stopped out, we'll very often just come in on a little bit of strength. You can see I'm not looking for much strength. Discounting, huge amount of bullish news. The CAD, I covered that in my CAD video a few days back. You can look that up if you wish. But USD due a major rebound in my view. What are we going to go to next? Let's go and take a look at some interesting crosses. We're in the cross rates section, and in terms of this first cross, it is Euro JPY. And this has been a trade we've been focused on for a while. Regular viewers know, got that nice move down, eventually taken out on the bounce there, but came back in at 122.50. So we got taken out on stop. We bounced above the 123 level. We view that as exhaustion. Back in at 122.50, we come down, back up. Now we're coming down a bit. Just under 100 pips profit at the moment, so no big deal, so to speak. But this one, from a long-term perspective, just so bearish. For us, we see, just like in Euro USD, any rallies being minimal and basically a big break to the downside. We've obviously got to take out support here, but I think we will do that. This level here should hold, which is 122.40. Our stop behind the next level of resistance at 123.30. I've put a target of 115.50. That's my first target. Much more bearish longer term. I think we're going down to 100. This is one of our favorite long-term position trades. Nice move down, bit of sideways. That sideways I expect to end and a big move to the downside. Now, in terms of the euro, pretty bearish everywhere, and I'm certainly bearish on the GBP. And in terms of this chart, what I like about it is this really strong euro uptrend, obviously. And you keep finding support at this 20-day moving average. A couple of touches there. Comes back, finds support there on that blue. Then on that blue. Now we're coming down. And that red is sitting right on double trend line support and the 20-day moving average. If you look here, you'll see, obviously, the euro can't get through the 90 level. A lot of resistance at 90. You can see it over here. And this level here, I do not see getting taken out. So break of here and then down to 87 and then chart lows. I think we're going to break to the downside next week, and a really good risk to reward trade. I mean, all the British pound long trades are that we're going to look at today, and this one I think looks really, really good. In terms of the next pair, an interesting one in terms of, this is where I'm actually bullish of the euro, and it's Euro CAD. And as mentioned, I felt the CAD is the most overbought major of all. And it's really hit the euro hard, okay? But here we've got exhaustion in my view. And we've come in at 147.40. You can see it. And just above this level here, get up, come back. This tail here, however, is not reaching that tail there. It's going to be very hard to take out this level and get our stop in our view, which is 146.20. This is just purely how would I put it, a swing trade. Yeah, I'm not bullish of the euro longer term on the CAD. I just feel the CAD is just so overbought in the short term that yeah, the technical picture here is very attractive. That big fall, you can get a retracement at least to the 20. I think it'll overrun to here, possibly up to here. So yeah, just an illustration of how overbought the CAD is. More of just a swing trade though than any big long-term view. Last pair actually is AUD CAD. Now, having said the CAD is overbought, I'm short of the AUD on the CAD, so I'm bullish the CAD here. This is kind of maybe a difference between long-term trading and short-term. I've been bearish of the AUD since back up here, and we've just basically been selling it all the way down. I'm expecting a bit of a retracement. You can see 93.30 in, 92.50 is our stop. So for me, the AUD is quite a weak currency. Anyway, the CAD is the strongest of the commodity currencies going forward. Yeah, I just think that 92 should hold. We'd bank a minimal profit if we came out. But yeah, AUD, no, I don't think it can take out the level. Yeah, the one pair, or two pairs actually, where I'm sticking with my CAD long positions. The other one is NZD CAD, which is a kind of similar chart. Yeah, I just feel that the commodity currencies, the CAD is the strongest going forward, just simply because, yeah, interest rates favour it. Also, its major trading partner is the US. That's good for Canada. Australia and New Zealand have China as their main trading partners, slowing up quickly. So from a long-term perspective, CAD should hold the edge on the other two commodity currencies. That sort of view has done well in recent months. I'm hoping it's going to continue. So here I've just kind of tightened up the stop, same in NZD CAD. Now, what we're going to do is go and look at some more pairs. I'm going to look at a couple more GBP pairs next. All right, just looking at GBP AUD. Obviously, this is covered fully in the GBP video that I did, but just very briefly, after this big fall, we've bought to go up a little bit. Now it's come back to first level support. Do I see it going much lower? No. This level here, major level, should hold. Stop is back behind the level. And in our view, yeah, obviously the bearish news totally discounted. Well, it's just our view in terms of the pound. And yeah, if you take the Brexit issue aside, UK economy, far better health. Australia's cutting rates. UK is going to be raising them. Pound is going to, in our view, have a major rally. Obviously, if you're coming into this one, you'd want some strength. So maybe back through this double trend line here. But yeah, our stop is back here. The risk to reward, though, if our view comes to fruition, is really good. So this one came back a bit on Friday, but quite relaxed about it at the moment, and I think we will see a big move up next week. Now, one pair. This is oh, sorry, I've lost the charts. Let's get them. There we go. GBP PLN. If you are bearish of the euro on the GBP, then this is a pair to look at because it's a euro proxy. It tends to firm more than the euro when it's strong and weaken more than the euro when the euro is going down. And yeah, in terms of euro, we expect it obviously to weaken. And you can see it's a really big downtrend. Now look at what happens with the price action. We double bottom here, then we work up, sideways, and now, for the first time in a good while, this 20-day moving average has given way on a close basis. I think follow through buying next week and a huge rally is coming. So for me, a great trade in terms of risk to reward. I'm just so bullish of the, well, I'm bullish of the British pound. I'm sure most regular viewers know that already, but good trade setup. Here's another one. If you're bearish of the euro, it's USD CZK, Czech krona. Now, in terms of the USD, if the euro goes down, the USD, same argument again. The proxy currencies will go down quicker. Okay, So the USD should move up better on the Czech krona than the euro will move down on the USD. So basically, it'll be more profit from this one, similar to GBP PLN. And we've actually been very aggressive with our entry and just don't see much downside. Just break above this level here, up to here, and you can see I'm going for the weekly resistance level of 23.50, which is off the top of the screen. So a little bit of profit at the moment, decent profit. We've locked some in, obviously, with our stock. I'm just hoping this one runs to the upside. These proxy currencies always worth looking at if you are bearish of the euro. Also, like to GBP PLN, I'll look at USD PLN in a moment as well, which is another great trade setup. What else in here? I've got gold, but I've covered that in a separate video, so we don't need to look at that. Now we are going to go and look at some other USD pairs and also some yen pairs as well. So let's just go and take a look at them. Right, we're on a USD pair, and it's a lesser looked at pair. It's actually USD Turkish lira. But this pair is always worth keeping an eye on because it is so volatile. You want volatility as a Forex trader. This candle here, this big red, is a 5% move alone. Okay, and what we've seen is the USD fall hard. But look at this 20-day moving average. We're failing to close above it. The USD's just gone down. It's come back up now, just below the 20 again. Now, in terms of why I'm so bullish of this one, is because Turkey and the US just not getting on in terms of Turkey buying a Russian missile system against Donald Trump's advice, let's say. Donald Trump could well come in with tariffs against them or punitive action. I think that's highly likely. Also, the USD has fallen to levels now where it just is really attractive as a buy. You've got nice firm triple bottom. And the Turkish economy, really bad shape. It's only been strong, the lira, just simply because of the interest rate earnings. But dollar at such an attractive level now, those problems looming in the background in terms of US-Turkish relations, which could be a 10% plus move up to here, then up to 7, that's 15%. No leverage. Great trade to keep an eye on. If we get through that 20-day moving average next week, I expect continuation of the uptrend. Now, in terms of another Euro proxy, it's Euro Huff. And yeah, they are nice currencies, these one. Got in at 285.50 just as we came up through this 20-day moving average. Nice move up, bit of retracement, but just natural retracement for us. We break out here, go straight to here, then up to 300. Okay, so yeah, another proxy that's a good-looking one in our view. What have I got next? This is one to keep an eye on. It hasn't come to fruition yet, but it's going to shortly in our view. And we're heavily bearish of the New Zealand dollar. We did get a great short trade, which regular viewers might remember as we came down here, then we got stopped out. But it was, I think, about 300 odd pips. We're back in at 66.70, and we're not really that much different at the close on Friday. Came up strongly there, rejection. Now we're coming up strongly again. I've said it, I'm sure, a couple of times previously, but market too bearish on US rates. This is a strong level. If it holds, we break support straight down to chart lows, then 60, then 50 in my view. So very, very bearish of this one, but it hasn't come to fruition just yet. The commodity currencies for me, longer term, fundamentals are terrible because AUD and NZD, because both cutting rates, global trade is slowing, their major trading partner is slowing, which is China. Commodity prices are going to go down. Very hard for the NZD to get higher from here. In my view, we shall see. One to keep an eye on. USD SEK is another one that we like. Sorry there, moving my chart too much. We did get stopped out for a minor profit. We took that long there, gave back profit, just ended up with a little bit really. But here, good support, 20-day, get above 940, then back to chart highs. With the SEK, you've got terrible problems in the Swedish economy, and you've got stimulus and no chance of rates going up soon. So I just feel this one is a great buying opportunity. USD is kind of getting ready, I think, for a big move. Yen, I think, it's confirmed a big move in terms of, well, not confirmed a big move, but confirmed continuation, in our view, against the USD and the euro in terms of strength. And I think it's going to do the same on the commodity currencies. Again, this one, we had a nice trade down, which regular viewers remember. We get the rally, get stopped out. But again, it was a 300 pip profit. Now back in at 75.50. Not too much change at 75.72 on Friday's close. But this is just a correction of oversold. Okay. This is really big resistance, this 76 level. I'm going to try and get up to it and break it, but I don't think we can. I'd come through the 20-day moving average for fresh shorts. Get through here, chart lows, then 60 longer term. Just so bullish at the end. I think, keep an eye on this trade next week, because I think it could confirm yen strength. And this one, I just really like the look of. It's CAD JPY. Big bounce up, but look at us now. 5 candles, no, is it 5? Yeah, 5 candles struggling to take out the 83 level, traveling sideways, and we feel the CAD is the most overbought major. We're in at 82.50, not too much change at 82.80 on Friday, just basically through this triple bottom low, down to chart lows, then down to 70. I think this could be a really great trade next week. So I think, yen, already going up again on the USD and euro. It's going to do the same on the AUD and the CAD, and also the NZD, which I'm going to look at in a moment. Let's go and look at a few more charts. One's a British pound pair, some USD pairs, and NZD JPY. So this pair is the last GBP pair I'm going to look at, which is GBP CAD. And in terms of what we've got here, most overbought currency in terms of the CAD in recent months, and most oversold in terms of the GBP. So it's an obvious one for us to go for. And in terms of a really big trend to the downside, and then we kind of flatten out here. Okay, we're hammering out support in our view on these sideways candles. The volatility has dropped. You do get the poke through on Friday to a new low. No sellers, come back within. Just got to get back above Thursday's high, and then we'll run, in our view, to 170, then 174. The risk to reward on this trade for us, we said it on the previous British pound trades, really, really good. I think this could be a major mover in the coming week. So really like the look of it. What do we got next? Sorry, I need to get my charts. Already looked at GBP, PLN, USD, CZK we've looked at. Here's the USD, PLN, another nice proxy. And came off these lows and came in at 375.50. Moved our way higher, come back to test support. I just feel we're going to go up to here and then 420. So a nice looking proxy. USD, any pullbacks on the proxies, I think, are buying opportunities, or euro proxies, or you could buy them on strength as well. What's the next pair we're going to look at? We will look at NZD JPY, will be the last pair as well. Again, nice big fall down, which we were lucky enough to catch, and then we got stopped out. Now we've come in at 72.20, and that's where we are right now at the close on Friday. A similar story to the AUD. It's going to be very hard for the NZD to break up on the yen and get through 73. I've got the stop at 73.80. I'm going to bring that down to 73.30. But break through here, through Thursday's open, then down to chart lows, break them, and I think we're going a long way to the downside. So there are a few pairs to look at, and I just think the week ahead could be interesting. Obviously, everyone knows I'm extremely interested in the GBP for a big move, but yen, I think, is going to really start to firm up and continue its bull move. And I'm also looking for the dollar to confirm some strength as well. So for me, it could be hopefully an interesting week ahead. We shall obviously see what happens. But that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.